Good evening, I'm Epstein, and here we are on Thursday, the 9th of January, 2025, about 6:25 p.m. Central Time. I don't know about you, but I was watching the markets today, and it was one of these days that it was more like a holiday trade than anything. The stock indices closed at 8:30 in the morning. You had some of the other markets closed, but others went on the whole day. And then if you go to your charts tonight, you're going to see they're going to include on the stock indices the half day of trade into the trade of Friday. Not so in other markets. Gold was a normal market. Silver was a normal market. I was expecting a rally. Let me tell you what's been going on, and people aren't aware of it. Because of the fear of the Trump play, when you look at the gold, the silver market, the copper, and if you go and look at the London Metal Exchange, you understand the disparity that has gone on. We are getting a form where we're not in line with what that market is doing at all. They normally track each other very close. So what we have here is one of these situations that we are lifting. They are not doing that in London. And the question is, for the big arbitrator, and I'm talking the person that can actually deliver on the goods, there's some serious money to be made. I covered all this tonight in my full research, and if you go to irapstein.com and you sign up for our research, you get this, and I cover it in detail what's going on. Is it a squeeze play? It could be one. It's probably better off in silver than it is anywhere else because there's not as much of that to be delivered on the contract. Just an interesting point that I want to do. A lot of people don't do this type of research. I look at it. Your December non-farm payrolls data, that's what everything is going to be about tomorrow. So they're going to look for this market in a big way. I know the number. It's in my full research tonight, and I'll leave it at that. I know the number the market's expecting is how I should say that. University of Michigan, the preliminary January consumer sentiment indices, they're going to come out at 9 o'clock in the morning. This is an important number tomorrow. You know, we don't get this month the Fed meeting until the end of the month. Normally they're about mid-month. So you're going to get CPI, PPI, number of other parts to it, and that will determine in part what traders think. Now, if you go and you look at the CME Watch page, you got like a 7% chance of the Fed cutting rates in the month of January. It jumps into the March meeting where you're in the 40 percentile, but if you go all the way out, that's about where it's sitting right now because traders are confused. They're hearing all the Fed members, and I will talk about this in the financial update. Maybe we should just move to the charts. I'll cover this there. In the gold, as you know, as we pulled back here, I've been telling you all week that the market should fight a battle at the 18-week average of closes for direction, and it did. And so far now, we are up about 1.5% for the week. The market took off today, a thin volume day, but the market moved to the upside again. You have had a pattern of higher lows, higher highs, bullish. What else? The market has been fighting a battle between, and it began actually back here, where it started fighting at the green line, the 100-day average and the 18, back and forth, and it resolved itself to the upside. But each night I've been telling you, I suspect that the rally could be somewhat limited because the Bollinger Bands have been falling to meet resistance. And you tell me what happened. You went right up to it, and it's like the brake hit the market. And now the question is, does the market add to that and run off the important jobs report? Does it back off from it? But at this point in time, until you get back under over here, the bulls have grabbed control of the market. They've had control. And back on Tuesday, they puts themselves back over both averages, and it hasn't given up the momentum since then. You are overbought into the resistance in an uptrend. When we come to the gold-silver ratio, I changed the color properly because now you put the color silver on. Is the silver market, if you take a look, is under the 18-week average of closes. I could move that right up there, but I wanted to show it tonight. I'll move it there over the week. And the lower the numbers go, the stronger silver is than gold. When we come to the silver market, I see big resistance at 31.45 to 43.5. Understand the word resistance is just that. It's not a signal to go short, but when you're not embedded in the market, if it should hit that, it's probably a zone the traders will come out. Now also, during the week, I know what I was saying here. Let's get back into Wednesday's trade. That the first resistance zones would be the combination of the 18 and the 200-day. It's exactly what it did. If it succeeded, the next zone of resistance would be the 100 and possibly, depending on where the Bollinger Band fell, the Bollinger Band. Let me come back here. This is what the market did today, Thursday, and here's where you're at tonight. So again, I think that we're right into that zone where you pay attention. In the copper market, look at this vertical move. I've given you the reason for it. Traders are fearful that if the Trump administration decides to take certain materials and put across-the-board tariff, copper's one of those that it could be. Now, we've heard, of course, the Washington Post say, no, that's not how they're going to do it. Then we heard the Trump himself say, no, that's not what I told anybody at the Washington Post. I don't know what's real, nor does the market. And that added fuel to the fire and kicked this market. You've just gone from the $4 level in 5 days, 6 days, up to the 431. That's an awful big number to go. And I was looking at it going, what is going on? Because China's not doing the job. That's not what you're seeing. And that was it. I finally found the stories that I needed and the explanations. Platinum is in the same camp. So it's just moving with the silver, the gold, the copper, all through that. In the dollar index, tomorrow's going to be an important day in this. The market's in an uptrend. You have the slow stochastics at an overbought status, approaching another resistance point, the upper band, but I'm going to repeat. Hitting that band, you might see some profit taking, but it's not a sign for traders to get bearish the dollar. That isn't what we're saying at all. This market is strong as can be and looks to continue with that. So that's where I think you're at. We're going to cover this and a lot more tomorrow when these reports come out because they're going to occupy the day. And traders will try to glean from it. First, they'll say, well, labor's still strong. The Fed doesn't have to do anything. Or if the number comes out much weaker than it's estimated, they'll say that's it. Now you see the weakness showing. The problem that we haven't seen is in the JOLTS report and the unemployment claims. They haven't weakened that. We see the ADP numbers have fallen, but we're also seeing on the Challenger Gray this morning that corporate planned layoffs keep slipping down. People are retaining employees. They're not letting them go. 4.2% unemployment is what we're looking for. Let's see what all this comes about. We'll write about it. You can get it sent to you by email. Go on to iraepstein.com. Free offers. It's that simple. Or you can move your cursor up here. I'm Ira. You have yourself a great evening. I'll be with you first thing Friday morning. Take care.